Ganesh Balendran from ETF Securities, welcome.
Thank you for having us here, Drew.
First question for today is: what are the key themes you're seeing emerging across global equity markets?
Well, we're sort of seeing the rise of thematic investing, whereas investors are looking at positioning their portfolios to take exposures to certain future trends, shaping our global economy, and these are generally secular trends that we're sort of seeing. We're seeing huge amounts of interest into some of our thematic ETFs as a range, as investors are bringing these exposures into their portfolios. The ones that we're seeing is our Robotics ETF is getting quite a bit of flows and interest this year. But our number one exposure this calendar year has been our battery tech and lithium ETF, which has just exploded in growth and interest from investors across the wide spectrum, from your single, small mum and dad investors all the way right up to your more wholesale investors. It is a theme that's well spoken and in the media at the moment.
And what does the universe of those two products look like? Is it just looking at explorers and miners?
So there's the two exposures are quite different. So firstly, the Robotics ETF, we have an actual index committee. So we're not just, there's no real index that's been around. So this is an index committee specialized, focuses on the robotics and automation theme. So they go around researching companies just like an active manager would to determine what is their technology rank, like how good is their technology, what is their revenue coming in from the themes. So obviously you need to have a high degree of revenue purity, and what is their market leadership in that technology within their peers. And each company gets a score based on those three measures, and the companies with the highest measures are the ones that go in the portfolio. So you're getting some real purity to the theme. So we're not just putting in FANG stocks in there who are not generating the significant enough revenue from the theme. Our battery tech and lithium is trying to capture the whole value chain of the theme. So not just the battery manufacturers, we are also looking for lithium miners who are the input costs as well. So investors are capturing the input into lithium prices via lithium miners. So you've got Mineral Resources, Pilbara in there, and also the battery manufacturers like your Panasonics, your LG Chem, your Teslas of the world, and some of your car manufacturers as well.
And we've seen volatility pick up on a day-to-day basis in the last 12, 18 months. How important is execution for advisors likely to be over the next decade?
Yeah, and I think execution is always going to be important, regardless of volatility. You know, when you execute, how you execute is always important. What we tell advisors, it's always, you know, we have a trading line that advisors can call up to help execute some of these strategies through volatile periods or through normal periods, depending on if it's their first time they're buying these sort of ETFs or any sort of ETFs, and or on volatile days when you're going to potentially see spreads widen from our market makers.
And what have you seen in conversations with advisors as being the barriers for them or their clients investing more into thematic strategies?
Yeah, and I guess it's slowly turning the corner, but the main barriers around awareness, understanding, and that education piece, where you sort of have to sit down with clients just to mention how these sort of fit within portfolios. And also the basic one is this, knowing what the opportunity set is available out there to give clients exposures to certain areas that they have conviction and also their values line up with, whether it's batteries, whether it's clean energy, whether it's robotics and automation.
And your firm's well known for their world-leading gold ETF or exchange traded product, but markets are going well and gold not so well. Is it still popular? Does it still have a role in portfolios in your discussions?
Absolutely. I mean, we always see gold as a cornerstone of asset allocation, of diversification in portfolios. The good thing about gold is because it's been around for many millennia, we know that it does well in a crisis and it suffers when markets are going well. And in this current environment, since the vaccine's been announced, we've seen equity markets run hot, and we've seen investors rotate some of their safe haven exposure to investments like gold and cash and moving into equities. The thing what we've sort of seen, investors sort of know that gold generally will fall behind in a bull market. And investors generally, when they hold gold, they hold it as a small percentage of an overall diversified portfolio. So we tell clients, when you're looking at gold, don't look at it in isolation at the moment. Look at it at overall portfolio. How is your overall portfolio going? And that'll sort of help to see gold as more all-encompassing portfolio building block rather as an individual block that's actually underperforming. And the theory of asset allocation teaches us that, we need to have diversification, asset class moving in different directions to help smooth out returns through market cycles.
Thank you, Ganesh.
Thank you very much, Drew.
Thanks.